Let me start before with a small introduction about our company, what we do, and what we are trying to achieve. About myself as well and the other speakers who are going to be here today. AudaCity Capital is a prop trading firm. We are based in the city of London. We've got around, at the moment, around 562 traders. We started 8 years ago in 2012 here in the city. It was just before the recession. Our main business model is mainly we are short-term guys. We look for short-term opportunities. Our business model is to trade the financial market, looking for short-term opportunities, trying to make and speculate, make profit and speculate the markets in order to make profit for the company with the minimum risk. This is our way of doing trading. We run at the moment 2 programs. The first one is the Funded Trader program. It's quite famous. Most of the traders and people who are familiar with the industry, they know it. It's mainly designed for people. They got experience and they have been trading profitably for a while, and they have a good strategy, but they don't know they don't have enough money. Technically, they're just undercapitalized. So that's what the deal with them is very simple. We take them through onboarding process. If we think they are good, we allocate for them capital and we split with them the profit. This program is designed for experienced, and we just allocate capital for them to start. And the second one, which is the Hidden Talents program, is mainly for people that don't have experience and they never traded, but they want to become professional traders. So that's quite different compared to the Funded Trader program because it comes with training. We take them if we think they are good and they have a good potential to become professional traders. We take them on board. We train them on the daily basis on the trading floor around traders, covering all aspects of trading. And at the end of the training, they start managing our capital. This is a small introduction about our company, what we do, and what we are trying to achieve. Today, webinar is going to be mainly about the pandemic, how we struggled as a company, as individuals, to deal with this funny, difficult time, and how we face it. And we would like to share with you maximum experience because actually it was quite rich as experience because we never seen such things in the past, you know. It's just unprecedented time, unprecedented things we had to deal with as an active company in the financial industry. So that is learning. Is definitely a learning experience, and when you don't know what to do and how to react to something you never had to deal with in the past, I think it's definitely something you'll be learning a lot, you know. And this is actually our main goal today, just to share with you our frontline experience between brackets and to give you the opportunity to get a better understanding of what we are doing and what trading firms and other active members of the industry that are doing to face the risk and to deal with daily stuff, especially when it comes to prices. We're going to be joined today as well with during this webinar by 2 of my colleagues that are one of the best in our team. On my left, we've got Federica. We're going to start with ladies first, as we say. Federica, she's one of our top traders. She joined the company 3 years ago. She has a good experience dealing with the markets, and she's a full-time trader. She's managing our capital, and she got a financial background. In her presentation, which is going to cover the comparison between 2008 crisis and today pandemic crisis and how we dealt with it as a company or even as analysts watching the market and taking it as a view for the next couple years. And on my left, I've got John Ozibona. He's head of training. John, he is responsible of daily training with the mentor. He's a mentor. He's one of our mentors. He's the one who is going to look after the trainings. His mission is to make people who are joining the program profitable as soon as possible. On top of that, he looks after the educational side of the company, making sure he's providing knowledge and sharing knowledge with all our team of traders and people who are looking to become professional traders. Yeah, he's going to cover as well in his presentation the educational side of this pandemic. What can we learn from it? Our takeaway. What can we give you as an advice? And how can you take maximum advantage from this period of time in order to learn from it and avoid avoid some mistakes in the future. This is regarding the presentations. If you are going to talk about this pandemic and how we dealt with, definitely is it's funny time. This is what I can say. It's a funny time. I've been in this industry for the last 12 years. I started my career in an investment bank in Germany. We was really, had the experience to deal a little bit with 2008 breakdown of the Lehman Brothers and the crisis. But I think what it makes this crisis unique comparing to 2008, this is affecting everyone. This is the first time in history. In 2008, it was mainly affecting people who are active in the financial markets, but with this pandemic is really affecting everyone in a way or another. And definitely in a different degrees, you got some people that they are affected more, and some people that are affected less, but everyone is affected in a way or another with this pandemic. But that is definitely a tough thing to deal with. As a prop trading firm, we've got more than, as I said, 500 more traders that are trading and active on a daily basis. But the first challenging thing we faced was mainly to manage our risk and reduce our exposure. It was really challenging on daily basis. What we do here, making sure we have everything under control. Our risk team is watching our traders. We don't take too much risk. We need to hedge our exposure. That is really too much pressure. We never had to face such a stressful time in terms of dealing with the markets and dealing with with such exposure. And the second thing as well, which is we learn from, is always you need to have a second plan, a plan B, because in normal market conditions, you have what we do usually in a normal time, but when something is happening or a breakout of a pandemic or war, whatever, you need always have like a sort of plan B or a way to get to face such challenging time. And this is actually what we learn. You need to be prepared. And I have to be honest, we were not that prepared for such, or at least no one imagined that it could be that serious in terms of what we are seeing today as a breakout of this pandemic and the effect of on the financial markets. And the third thing, we had to face and to see something we never seen before. As I said, for example, the oil, for the first time in history, the buyers has to pay the sellers in order to buy from them. But imagine if you go to a coffee shop or wherever, the coffee seller, he needs to pay you in order to buy from him a coffee. Well, this is actually what happened in oil last couple months. So that, and I'm sure we're going to see more things happening in the future. But what if you're going to ask me? Many people are asking me, especially our colleagues in the media and people who are watching and analysts. They said, "What do you think is going to happen? And what's the best advice can you give?" Especially for people who are at the moment studying or that would like to take advantage and learn more about this pandemic in order to adjust their strategy in the future or their plans. I think what I can say to you, especially you guys, you are at the moment in the uni and you are going to be soon in the employment market. Always don't count only on one stream of income, because we have seen many people having normal jobs, good high profile individuals that just made redundant without any notification. That's always try to diversify your income. Try to have at least a proper plan for the future, just to make sure you are managing your financials properly. And the second thing is you need to try to understand more the financial market, because many people who were investing in the financial market are in a way or another in a better position, because they just got this opportunity to at least hedge their risk or make a little bit of money in order to adjust in their lives and their books and their accounts. So, like, for example, what's happening in gold, many people that were taking good advantage from it and making quite a good money in oil as well, and in some currencies, in the stock market as well. That's as an experience is definitely rich. Is very definitely there's a lot of things to learn from an academic side as well point of view. There is a lot of things to be to do some research about what is happening. We are in it. We are not trying to predict what is going to happen in the future, but definitely is going to be a challenging time. For that, if you have any, what I can say to you guys, if you have any questions, please feel free to ask your questions. We are here to help you, and we do lots the webinars in the past. I think the first thing we did with LSE Trading Academy, it was trading society. It was 3 years ago. We were supposed to come to your trading your companies just to help and to give more insight about the financial market and financial trading. So that's I'm going to hand over now to my colleague Federica. She's going to start her presentation. What I can say to you, please do your best to ask questions, and if you have any questions, feel free to ask it. For that, I hope you're going to enjoy it, and I hope you're going to enjoy this presentation. For that, as I said, if you have any questions, please feel free. Okay, please, Federica.
Good evening, everyone. Thanks, Karim, first of all, for the nice introduction. And okay, I was there just a few years ago, so I do realize what it's like to study a financial crisis, actually. And that's why I wanted to start the presentation comparing basically the global financial crisis that we had in 2008 with the actual pandemic that we're experiencing right now. We will have a focus on the impact that the virus outbreak had on the stock market, the crisis that we experienced it on the oil market, just like Karim explained earlier on, and the reaction that we'll add to the pandemic. And we will have also a look at what happened to the Forex market throughout the 2020. So, okay, 1 second here. So the first thing that anyone does during a crisis is looking backward to basically find similar scenarios in order to analyze and compare the causes that basically led to that point and the evolution of the crisis itself, and of course to try to forecast an hypothetical, at least, recovery path. If we compare the coronavirus pandemic with the global financial crisis of 2008, we can see how this crisis differs from a basic economic perspective. That is the nature of the risk. The global financial crisis was resulting from an endogenous risk with economic origins, and namely the disruption of the financial system. The current crisis instead has its root on an unexpected public health crisis. For that, we are talking of an exogenous risk that hit both the financial sector and the real economy, and that is why the impact was that big. What it is important here to highlight is the impact of the crisis, not only from a demand side, but from a supply and a demand. We have a double impact here, and this is due to the global lockdowns and the interruptions of services and throughout the world, and not only so the consumer spending. Here we can see how the stock market reflected the crisis. So from the perspective of the stock market, we have witnessed a severe sell-off worldwide. By the end of March, all the major indexes declined for over the 30% of their value at the beginning. And another important difference, though, that we want to outline here is the rapid recovery that the market had. That's basically the majority of the indexes regained most of their losses in a matter of months, if not weeks. If we compare that to what happened the years of the global financial crisis, where it took months and years actually to recover from that levels. And especially here, I just wanted to show you this picture. This is basically a comparison not from the global financial crisis, but from the Great Depression, because what happened, what is happening actually today has also been compared to the Great Depression. And we can see how the recovery was very, very steady. Regardless, the losses were severe and very steep. Now, let's also have a look at here. Yes, this is actually what we were talking about earlier. The interruption of the economies and the services worldwide led to something unprecedented on the oil market. The collapse in the demand for oil and the delay in cutting the global production of oil led into a fall of the oil price that actually turned negative, falling below zero for the first time in history. And this, from a student perspective, it was something really, really, really interesting, because of course you are experiencing in the market something that never happened before. And you also need, as a trader, to react to that, because of course that had an impact and an influence throughout the market, throughout the financial market and assets in general. So the main reason behind this price of oil going negative was because of a very much reduced demand in oil paired with a continuous supply. Basically, the level of supply were kept almost to a pre-crisis level. For that, the result was basically the paradox of the sellers that were actually paying buyers also $30 per barrel to actually take the oil out of their hands. And this is something like really, really interesting. On top of that, that said on the oil market, gold, the reaction of gold. Now, academically and empirically, we know, is well known the role of gold as a safe haven asset and is very much recognized. Now, an increase in gold prices was not completely unexpected in such environment, in such a period of crisis. What although is remarkable here is the level of the surge in the gold prices that increased more than 30% throughout the year, reaching for the first time in history a price of $2,000 per ounce during last summer. Now, forecasters, we are here not to forecast, so again, the disclaimer, don't take any kind of advice, it's just research, but forecasters expect the price of gold to keep its steady growth, due also to a possible increase in the inflation levels as a result of the stimulus that we are and we might continue to experience in the global economies. From a closer point of view to our firm, From a foreign exchange point of view, since the pandemic outbreak began, we have experienced very high levels of volatility in the currency market. If we have a look at both the dollar index as well as the cable, the pound dollar chart, we can see how since the beginning of 2020, how those two have been impacted not only from the virus crisis, but also from Brexit talks, Brexit happening, and also the incoming presidential elections. So that, of course, what happened is that the crisis represented for us as a business in the financial industry since a risk and an opportunity. And this is especially for traders because volatility can work as a multiplier. But of course, it depends on which side of the market you are in. So we had traders within our company that had very good results in terms of profitability, but we also know that for sure market conditions have been particularly challenging for the financial operators in general and for our other friends traders. So I think this is the end. Now I'm going to let John give you a better understanding of what happened, especially in the currency market in particular. So thank you. And if you have any question, please let me know.
All right, good evening, everyone. I'm John Osabona. I'm responsible for training on the Hidden Talents program. I've been at AudaCity Capital for just over 18 months, going to 2 years now. Thank you, Federica, for the introduction. I'll be covering just a few key fundamentals that myself and traders have observed during the pandemic and how we use these fundamentals to make our decisions while we're trading the financial markets. The first topic I'll cover is the FX continuity plan. As we experience this pandemic, we've seen a lot of volatility, as Frederica has expressed, shown us the dollar index and the pound cable pair. I will talk about how this has affected the market and how our everyday lives has changed, because the unprecedented healthcare and economic crisis caused by the spread of COVID-19 has been a major disruption worldwide. And over the last few weeks, a lot of businesses have had to initiate business continuity plans in order to progress and in order to stay afloat. At AudaCity, we've technically adapted to this COVID-19 precedented phase very well. We've gone digital. Most of our floor traders do work remotely by default, but the only difference is we have our Hidden Talent program team on the floor. But now we can accommodate both sides of the market. We can work remotely, we can work in-house with social distant measures in place, and we can get best of both worlds. Technology has been a major platform that's helped us make this progression. We now use companies like Zoom, Cisco, Slack, Microsoft Teams, and other technology platforms to help us work remotely, to have our strategic meetings, also to have our traders work with each other, communicate with each other, exchange strategies, and actually trade the markets live via remote sessions. And during this continuity plan, major countries have been affected. I'm going to talk about the US, Europe, and Australia and New Zealand dollar. Australia and New Zealand are known as the commodity countries because they depend on gold and other commodities, whereas the US is a consumer-based economy. Looking at the US, unemployment rate has climbed to significant levels at the peak of the crisis during the first phase of the lockdown during March. This has caused a demand for the dollar to drop, and investors have run to safe haven currencies like gold, as Federica mentioned earlier. Gold and the Swiss franc and the yen are known as safe haven currencies. So when there's a global pandemic or geopolitical crisis, people tend to put their money in safe haven assets. The current movement of the US dollar has been driven by emotional gauges. A lot of people have been emotional with their trading. So not just trading from a technical point of view or from a fundamental point of view, a lot of the volatility can be factored into emotional trading as well, because a lot of governments have stepped in to help businesses survive. People have been on furlough. At the same time, no one really talks about economic growth. How do we survive and grow the economy moving forward with this pandemic? One of the biggest factors in unemployment that's been skyrocketing around the world is the result of the lockdowns. And even till today, we have Germany, Italy, and other European countries going into further lockdowns. These will amount in job losses. Looking at the health sector, we have a lot of NHS workers working to try and help people with contracting the virus. We have the service industry, the hospitality industry, the banking industry, and especially the retail industry going into lockdown, and people are not spending money as they used to. But at the same time, a lot of people are spending more time doing online shopping. So we have seen that significant growth that Federico was talking about due to online shopping and a lot of people staying at home and not traveling to work anymore. So not traveling to work, people are seeing themselves in situations saving a little bit more money, but at the same time, the long-term view of this is not sustainable because we don't know the uncertainty in terms of if we're going back to work and when this pandemic crisis will be over. And as Federica mentioned, we have previous cases of the 2008 global financial crisis, and it can be compared to the Great Depression. Looking at the stock market as a whole, we can see all these results I've just mentioned and all these key fundamentals reflected in the S&P 500, which is known as the financial side of the US index. And we have the Dow Jones, which houses 30 of the biggest blue chip companies on the stock market in the US. A lot of traders have been taking money out of the market, which has been devaluing a lot of the stocks on the US market. This is not saying that these companies don't have real-time value. It's just that the dollar is weak and these companies are being revalued at the current rate of the US dollar. And this evidence is down to emotion because people now need liquid cash. And liquid cash being taken out of these companies, people selling their stocks, bonds, taking their savings from their account is causing another problem. And this problem, as I mentioned before, we're not looking about how we're going to grow the economy. We're just trying to live for today to survive this crisis, which will be a long-term problem of its own. The economic impact of this virus is causing fluctuation in currency values. If we look at the Japanese yen and the US dollar, and more especially the Swiss franc and gold prices, we can see the volatility moving from left to right. At present, we have a weak dollar and we have cable, which is a pound. Because of Brexit, uncertainty, and a lot of things on the horizon moving forward, but we haven't moved forward with a Brexit deal yet. We expect to see a lot of volatility coming up to the weeks of Christmas. We have the US elections next week, which will be a very key driver in this volatility. This week, the markets have been up and down, but as of next week, we can expect to see some sort of forward direction moving forward because if Donald Trump wins the election, we know policies will change. But if, unfortunately, he doesn't win the election, we know Biden will bring in new policies as well, which will affect the US dollar. And what affects the US dollar will affect the other global currencies. This is because the US dollar is a major international trade currency. Oil is measured in the US dollar, businesses are measured in dollar, and we have GDP, which is measured in the US dollar. Question for everybody, is the pound under pressure? Yes, it is. The pound is under pressure because of these key financial and the lockdown we're going through. We are present in London where we've got a partial lockdown with restaurants and the retail service industries closing at 10 o'clock. Well, how are people spending and stimulating the economy when we're locking down key areas and businesses where people put money into the economy? Sterling will be vulnerable because of this global economy continuing to slowing down, and with COVID-19 cases increasing, we don't expect this to stop anytime soon. Brexit is now seen as a more pressing issue, but the UK economy is dependent on global trade, as I mentioned in the slide, and a noticeable dip will have consequences for the pound. Another issue we need to address is the disease. Can the disease be contained in the UK? Cases have been reported and swift quarantine actions have been in place to help people being affected, but yet cases still intend to rise on a daily basis. In the city of London, businesses have taken precautionary measures by sending staff members home who contracted the virus, but that's not good enough because most households share accommodation and live with more than one family member, probably 3 to 5. This doesn't help the spread of the virus or the control of the virus. And this is where we are as we don't have a vaccine in place. While this helps with containment, sending people away from the workplace, this still puts further pressure on the economy. And when people are not spending money and people are not earning money, the pound is destined to get weaker and very vulnerable. Looking at the European Union now, Great Britain has left the EU. So what's going on in Europe now? Europe has had the virus more significantly than the United Kingdom, Great Britain. The Eurozone has worked closely with the World Trade Center and linked with China, which means slowing down has been a major impact. But at the same time now, we have to look at what is going on because Italy, Spain, and Germany have gone into lockdown for the last few days. And this is not going to be good for the euro because the German DAX has fallen over the last 2 days over 1.5%, and it will continue to drop until we can get some sort of reassurance moving forward with this pandemic. Because, like I said before, we've all looking at controlling the virus, but we're not looking about how to grow the economy. Because if everyone's going on lockdown and people are staying at home, who's going to work? Where is the money going to come from? Stimulus plans and quantitative easing does not solve the problem in the long term because it's artificial money. We can only pump so much money into the economy to solve the problem, but that is not solving the big issue moving forward. How do we grow the economy? And the expectation is that Germany will bear the brunt of the situation because of a halt in demand for cars in China. Germany, most of our luxurious fast cars come from Germany and Italy, but a lot of people prefer German cars. So purchases of German cars from the US, from China, and from all parts of the world does boost the German economy, because Germany is the main front runner of the European Union. But we're not getting purchases for luxury goods and fast performance cars anymore. So this is hitting the economy of Germany. Hence, we're seeing a lot of blue chip companies on DAX 30 fall in value. Finally, looking at the US dollar now, we have the elections. Relatively limited impact on the US dollar at the start of the year, but at the same time, we've got a very high unemployment rate. If people are not working in the US, they're claiming benefits, and that means the government has to look after them. So if the government is printing more money, putting more money into the economy just to keep people afloat, the economy is not growing. Donald Trump claims he has a virus and vaccine in place, but people still wait to see if that comes to fruition. But prior to the pandemic, Donald Trump has grown the economy by a significant percent. But right now, with the virus and uncertainty moving forward, we can see the economy dipping. And the solution, the long-term solution I'm saying, and as I keep on mentioning, how are we going to grow the economy? The US is benefiting from this risk on atmosphere in the currency market where there are no guarantees that it can maintain its position indefinitely, because some people are now moving to cryptocurrencies just to find a hedge. But cryptocurrency isn't regulated at this moment, and at the same time, we have a lot of uncertainty risk going into the cryptocurrency market. So in hindsight, what is the way forward? How do we grow the economy? So this is another reason why a lot of money is flowing into the safe havens. Commodity-based pairs, which we can refer to the Australian dollar and the New Zealand dollar, and the Canadian dollar. This is correlated to oil, gold, and soft commodities like dairy and other products. Commodity-based currencies are continuing to struggle from the pandemic. The Canadian dollar, as Federica mentioned in her presentation, Oil has been impacted by this. A decrease in the demand for oil from China is having an impact on prices, which is putting pressure on the Canadian dollar and on the Japanese yen, because Japan is a major importer of oil as well. Australia and New Zealand face the impact on tourism, and Australia is very dependent on China. So if China is suffering from a decrease in oil demand, that is definitely going to hit the Australian economy. So the Australian economy will not be growing. Domestic economy is already precious, precarious due to the devastation of the forest fires in Australia, limiting trade activity during a difficult time. So we have forest fires, we have the lack of oil coming into China, which is definitely impacting the economy. So this will have an effect on the Australian dollar as well. So if we are going to trade the Australian dollar against the US dollar, then we have to compare our key fundamentals together to see which currency pair has strength. So this is where technical analysis comes into play. But the fundamentals I've shared helps traders have a clear vision, a clear view on what to trade at what time and how to value their risk. Moving forward post-COVID, what is the solution? How do we move forward after this pandemic? From an FX point of view, from a stock market point of view, and from a trader's point of view, and from you guys who are students at the LSE, what's the plan after graduation? Do you run a portfolio? Do you join a prop firm like AudaCity Capital? Do you go get a job at Goldman Sachs or JP Morgan or investment bank? Or you start your own business, or you think of plan B or plan C. But it's very important to understand the way forward. And I always tell my traders, what is your why? What is important to you? Once you know what your why is, you definitely have an idea of how you're going to proceed moving forward post-COVID-19. This is what lies ahead of us. We have a lot of variables to consider. Unemployment, do we go back to work the way we used to? Do we go back to the same standard of living? Containment of the virus is a priority, but finding a vaccine is a second step, and this will take time. So I don't think, even if we do find a vaccine, we're out of the blue. We've probably got another 2 years at least before we get through this pandemic, and another 5 years altogether before the economy grows up to a certain level of acceptability. Until the issue is resolved with COVID-19, it's likely to cast more shadows, and more economists believe that the value of the markets and currencies in Q2 are going to give up more boosts and more volatilities and probably create more traders. I believe strongly from a personal point of view, we're going to see an influx of people coming into the Forex markets, learning how to trade the financial markets moving forward. Because with a lot of job uncertainty, trading is now become a lucrative industry to come into to trade and be profitable and not to survive. At the moment, the FX market is operating with a high awareness of risk, with all these variables in play, which I believe will bring more regulation in the future. Because ESMA stepped in 3 years ago, controlling leverage of the FX market due to traders abusing their positions, trading with very high accounts, not respecting leverage. So I do expect a lot of intervention from ESMA and the financial authorities moving forward. And this is what I have to share tonight. And I thank you guys for your time. If you've got any questions, I'm happy to take questions as well.
Okay, perfect. Thank you, John. It was really interesting. Okay, excellent, guys. Do you have any questions? Please feel free to post them in the chat and we are more than happy to answer them. Please go ahead. For Mr. UC, what made you make the switch from the sell side to the buy side trading problem? In one word, freedom. Simple as that. But if you would like me to give you more details about this, starting in an investment bank or in banking in general, and this is very interesting. You learn, you have the opportunity to learn. You are around professionals, you can learn from them. But they got the downside as well, you know. And trading for a big hedge fund or a bank, you have this umbrella protect you. You have the big infrastructure behind you to support you on daily basis and making your life easier. And you know, you don't have to think about the margin, or you don't have this stress because you have this big and massive infrastructure, people who are behind you just supporting you. Well, the transition from institutional trading to retail in a way, or prop trading, has been quite fascinating, and it's a good journey. It was quite adventurous because when you are trading for a big firm, you are just comfortable. You have your salary, you have that, you don't have that pressure. But the downside of the corporate world, too much pressure. You are just a number. You don't have enough freedom. You have just working by yourself, and there is no potential for a long term. That's I was always having this idea to to move and looking for an opportunity to implement what I want to achieve in my life. And I think it was the best decision ever. Working in a prop trading, it gives you more freedom to learn because you are not binded by the pressure of the compliance, and you don't have to do that, you have to do that. For that, what you can achieve in a prop trading environment within, let's say, a couple of years, it takes you years and years in other environments, especially the institutions and banks, and because most of them are just having this approach where you are not 100% free. You have, in order to take one decision, you have to go through all a process. It takes a long time, and you don't have that ability to face the markets, implement your point of view, and learning on daily basis. Yeah, this is actually what makes me thinking. And like many people, my colleagues back then, most of them are just looking to looking for other options. But if you ask me what I can give an advice for someone who is looking to start, I think being in a corporate environment could be useful for the first as someone who is just starting his career. But with the time, just to get stuck in this, what we call it, a rat race, there's no potential to grow. You know how with the problems of the corporate and the big firms. That's prop trading is one of the best options because you have to learn, and it's like an entrepreneur journey. You're starting with small account, and you are growing and developing. And when you start making money and become profitable, there is no limits. You just keep growing and developing, on daily basis, and you're your own boss on top of that. This is actually what makes me actually thinking to move from the buy side from the sell side to the prop trading. Thanks for your question, Max. Any other questions? Yes. Have you noticed drop in liquidity in the market for cable over few past months? So, yeah, okay, perfect. Yes, to be honest, cable, many people made a lot of money on cable recently. I can say around 65% of the profit of our traders, it was mainly from cable pairs. It's been really interesting. It was quite moving in a good, predictable way. We had some surprises now, some days, but overall has been really interesting as an experience. because just give you time to predict it, and this is what trader is looking for, just looking for like a short term. But in terms of medium or long term, I don't think it's quite interesting, because many traders who are swing, they lost a lot of money on cable, and definitely we have seen some drop in liquidity when it comes to cable. But what I can say, what we noticed recently on cable pairs is it's always respecting the levels. You've got some major important levels in cable, because that's why we call it cable, because it moves in like a cable, like it goes up and down, and that you've got some levels. We always have seen them, seen cable respecting those levels, and it was quite a good opportunity for traders who are trying to make profits with minimum risk in a short, looking for short-term opportunities. Going in, small stop loss, you secure your profits, and you close, and again you short. This is actually what most people are doing. We've got one guy, for example, you can check it on YouTube. We did a review of his account. He just reached $250,000. Yeah, I think it was yesterday. This is actually what he was doing. He was just trading cable and up and down, just going long when when he thinks he's going long, and he keeps putting his stop loss and closing and securing profit, and later he shorted on the other side. Yeah, so this is actually what I can say about cable and the drop of liquidity. Perfect. Next question: would you Aussie and Kiwi not be affected positively by gold dramatic price increase over the past few months too? This is a good question, and I'm going to get John to answer this question as well, because he was covering gold. He was one of the best analysts when it comes to gold. Definitely, because Australia and especially Australia, the big chunk of their economy is based on gold. That directly they affected. There is what we call it a correlation, a positive correlation between Aussie and gold. And always when gold is going up, Aussie is following, and Kiwi the same thing. For that, both of them commodities pairs. But I don't think we are going to see a big increase like gold, because me personally, I think gold is playing as like a substitute to bond markets, because many people now, there is a big problem in the States and all around traditional markets like here in Europe, because the interest rate is very low, and there is a problem of trust. The investors are looking for value, they're looking to make profit. That we have seen many people moving from bonds markets and the stock market to gold as a safe haven, because they think gold is going to help them to hedge the exposure. Because if you ask someone with any exposure on the stock market or bonds or whatever before the pandemic, and you ask any expert, and one of them, I'm one of them, there were many questions like that, and you ask me what I can do, I just say to you, buy gold. And many people who bought gold, it wasn't actually to make profit, because it was mainly to recover what like they lost somewhere else. You've got some traders who are quite proactive, and are they got lucky and they touched the gold move. But what it makes gold going up that fast and that far in the short period of time, I think just question of liquidity moving from other assets to gold and as a safe haven. And I will give a chance to John if you would like to have any comment on that.
Thank you for that, Kareem. With my experience with Australian dollar and gold, as I mentioned before, the Australian economy is highly linked with the Chinese economy. So whatever happens in China negatively affects the Australian dollar, which will also affect the New Zealand dollar, because they're all interlinked. But it doesn't mean because we have high gold prices that we're going to necessarily see the reflection in the Australian dollar and New Zealand dollar, which theoretically we should. We have to look at technical analysis as well, supply and demand. What if, as I mentioned before as well, if you remember from my presentation, China is dependent on oil. Oil and gold prices tend to go hand in hand. But what we're seeing right now, we're seeing weak oil prices and strong gold prices. So putting both of them in context together now, we need to see what price is doing, what is price telling us, what is price actually telling us, what are the technicals telling us. Because sometimes the technicals are not respected, fundamentals come into play, and sometimes fundamentals are not respected, technicals come into play. So we have to look at both economies on the whole and see which economy is stronger. Is it comparing the Australian dollar against the New Zealand dollar pair? Or do we compare the Australian dollar and New Zealand dollar pair against the US dollar or with the CAD pair? We need to see which economy has strength. And when we see where the strength is, we know what pair to short or to long. For example, if the Canadian dollar is strong and we compare that with the Australian dollar, AUD, CAD, we've got strong Canadian dollar. So that means we're going to short the Australian dollar. So this is what we need to do. We need to look at correlations, price actions, supply and demand, and put the fundamentals together and determine which economy is stronger and take our trade based on that decision.
Perfect. Thank you, John. It was really interesting. Good. Next question is, what is your opinion on a contested election on markets? Okay. Yeah. Americans, especially when you cover the American election, it's always funny and interesting, and always there is surprises. And definitely this time it's quite unique because we have Trump is there, and it's more like entertaining than doing a proper analysis. Definitely it's going to have a big impact. And historically, if you're going to talk about this the impact of the election on the markets, Republicans and the Democrats and the fight between them. Many analysts, and one of the interviews I did recently, it was the question, what if Biden is going to win? Do you think it's positive? Despite that Biden, he is trying to increase the taxes for the companies, but the market is really reacting positively to his plan, because Americans are just optimistic about the plan he's talking about, which is 2.2 trillion. It's just crazy amount. I don't know how to say it, but it's just big amount. But this money they're going to inject in the economy, I don't think is going to make a big difference, because the big players and people who are going to take advantage is not the American individual who is working and struggling to pay his mortgage, and he doesn't have money to pay his rent, and he doesn't have work, and he's looking for a job. I think Wall Street is going to take a big advantage from that, because recently we have seen stock market just going up with just like a crazy way, and some politicians that were trying to take advantage from that, saying this is a sign of the U.S. economy recovery. It's nothing to do with recovery with the American recovery, because Wall Street doesn't reflect the real economy. That's we have seen richer getting rich. The billionaire club is just keep going and growing and developing, but people who are on real street or the real economy, they're really struggling. That's definitely we're going to see some interesting things happening. I don't think we're going to see like a major things happening, because the damage has been already done in a way or another, and the stock market is not going, it never been, and is not going to reflect any real economy of what is happening on a daily basis. Erika, do you want to say something about this?
Yes. A lot of people are saying that actually it has already been priced in. Now, just like you were saying earlier, when we talk about the American election, we can never be 100% sure. We can never be 100% sure on everything, but especially with American election, you don't know what the reaction of the market can be. I remember when Trump was elected first time, and I remember that has a very, very big impact on the market. But this year, I don't know, from my personal point of view, I think that part of the repercussion that a change or keeping the same president can give to the market has already been priced in. And also at the moment we are experiencing so many financial stresses from everywhere. It's like we are having input from each and every side of the market. And so I don't think that there will be one of those that is going to actually decide the direction of the market. I don't think that the election will give that.
Perfect. Thank you, Federica. The next question, John, do you want to cover it? Is what is your opinion? Is the outlook of the fixed income market over the midterm, given the rates and yields are probably going to stay very low? Do you think the inverse relationship between the equity and fixed income is going to stay broken over the midterm? Yes, I think so. I think so because, it's just like an interest rate game, people are always looking for better opportunities to invest, and we are going to see some capital moving from such assets to different assets. And this is what I was talking before about gold and his role as a substitute to bond market. We're going to see a similar scenario. John, if you'd like to say something.
Yeah. Thank you, Karim. Thank you, Karim. From what I've observed on the markets, I think personally, like I did say before, during this pandemic, a lot of people have resorted into remote working. So I still see some potential in equities in the technology sector, because I see money flowing into healthcare, technology, and logistics, transportation. So once people start taking profits from these three sectors, I still see money flowing back into gold and going back and forth. So in terms of bonds and fixed income, I do not see any growth there anytime soon until we have a vaccine in place and we can move forward with a contingency plan of economic growth. So all I expect in the next few months is money flowing from healthcare, technology, and logistics out of the stock market into safe haven assets and vice versa, back and forth.
Perfect. Thank you, John. Next question. Let me read it. Does AudaCity Capital release information on the net position of its traders on each pair? It might be interesting to see what traders believe, but obviously I would not use it investment as advice. We don't because let me tell you something, how we operate. From the 578 traders we've got, everyone is completely independent to implement his own strategy. And this is what it makes us quite different and unique, and this is what it makes our strength, because diversity in trading is a strength. Because when you trade as a team, the good thing when you're trading as a team is like we are backing and helping each other. We are backing up each other and helping each other. When someone is not doing well, the other guy is doing well and covering up. But I don't think we in the past we used to have what we call it like a sort of a trading room where we get all our traders together and they just bounce ideas and helping. But we just stop it because of that, because they were like sort of influencing each other. When you see someone who is doing well and he's loud a bit, it's going to say I'm short on euro dollar or long on cable. For that, this is human instinct and human nature is going to make everyone following him in a way or another, or just influencing his own decision. That's what we try to do. We just try to keep each trader individually developing his own trading strategy, regardless of what other people are doing. And this is actually what it makes us quite good in terms of developing a good business model and a good trading strategy as a firm, and helping everyone to make profit and developing and growing with us. Any other questions? Okay, I think it's fine. We don't have any other questions. All answered. Okay, perfect. I think it's fine. Shall we? Okay. What I can say, I think is thank you very much for your time today. It was a pleasure to be with you, and I hope you enjoyed this webinar. We remain open here at AudaCity Capital. If you have any questions, or you would like to ask our expert or our team, or you would like to come to see us, or you would like to find out about the Hidden Talent program, or you want to have like a sort of internship, or wherever you think that there is a way to help you, be welcome to contact us via our website. Our team is more than happy to help you. And what I can say, I would like to thank Max and Sahil for the organization. It was making this webinar possible. We are more than happy to organize more in the future, and hopefully next time, or hopefully sooner, I'm trying to be optimistic, to be one of the seminars in your campus, and we'll be meeting you and talking with you and just trying to help you. As part of our politics and the strategy is just to be open, especially with the universities and students like you, in order to offer them all what they need to understand about the financial market, because at the university, as one I know, when you are at uni, you don't have this practical side. You are mainly in the theory. That's what this is what we would like to offer you, just the practical side, and save you time and save you money, if possible, as well, to give you a good insight about real life and the real world of trading and financial world. Because covering only theory, I don't think is always a good idea. But that's I've got to thank my colleagues, John, Ozzy, for his presentation. It was very interesting. Hope you enjoy it. And Omaina Federica as well with their presentation. If you have any other questions, what I can say to you, just keep safe and be positive, because this is a challenging time for everyone. This pandemic is not only affecting our physical health, it's affecting our mental health as well. So that just look after yourself, be positive, and just make sure, think that we are going to be one day out of this nightmare. And I hope you enjoyed this seminar again, and hope you're going to see you soon. Thank you. Thank you, guys. Sahil, bye. Thank you. Cheers. Thank you. You want to say something?